Hi guys, welcome to our channel Market Magix. We will be analyzing in this video to trade on 9th of December 2021. As of now the market is about to close. Now it's 3:22 and we are analyzing the market with Nifty 50, that is Nifty 50. See this Nifty 50 we are analyzing. We will be analyzing it for tomorrow, that is 9th of December 2021. So as of now market is about to close under 17,500. 17,500 is actually a psychological resistance also. So the market may close here itself. Now just 5 to 8 minutes are remaining. It's facing resistance due to this heavy sell off from here. See this, it is facing the resistance since long time due to this heavy sell off. Once this range is broken, it will travel upside only. So at the moment we can see that it is taking the resistance over here. So for tomorrow we will be analyzing the market. So let's go to the daily chart now. So what we can see in the daily chart, see this, after a huge sell off, huge correction, the market is now ready to move upside. See this, at the bottom of the total range we can see that there is a formation of a W pattern over here on the daily basis. See this one, can we see it? See it now, this is a W pattern. Okay, once this line is broken, that there will be a trend reversal, and from here it will travel like this, up up up, and again it will test this level, that is 18,600. Okay, I'm not saying to tomorrow itself it will be testing the level again, but after maybe in 1 or 2 months also. So but now it's a trend reversal from here. This is a confirmation of the trend reversal. Once this range is broken, we will be ready to buy on the dips. Whenever the market goes up and comes again, we will buy over here on the price action. Again the market will go up, again the price market will come down, we will buy over here, again the market will go up, again down, then we will buy over here, again up. This is the buy on the dips technique. So that's what I am saying, that once it crosses this resistance level, we will be seeing for the buy on the dips. Okay, buy on the dip strategy. So at the moment we will see where the major resistance is. You see this one, this is a psychological resistance, 17,500. Okay, 500, this will be the considered as a psychological resistance. We will mark this level with the red on the daily candle only, this one. Okay, this will be the psychological resistance. First of all, it will be facing, if the market opens under this, it will go sideways, or there will be little bit profit booking or little bit panic selling also till this level. Not, it will not be more, because at the momentum has started bullish. Up to this level it may come, it may drag down up to this level, not more than that. This one 360 or somewhere here, somewhere it may come down. Okay, this here it may take the support, and again it will travel upside only. Okay, now from here, from next resistance where it will be facing, oh see this will be the major resistance, this one will be one of the resistance, one of the small resistance over here at the 580 levels. This one 580 will be again a resistance, but the major resistance will be around 600 to 620 levels. Yes, this one. This will be the resistance, major resistance, 600 to 620 levels. Okay, resistance we will mark it with the red color. This will be the major resistance. See this one, we are taking considering maximum candles 600 to 620. Here it will be facing the major resistance. Okay, so how to trade for tomorrow, that we will see in the 15 minutes candle time frame. So according to the Fibonacci levels, we shall we see as per the Fibonacci levels where we can face the resistance. See this was the previous swing, this was the down previous swing, upper and the down points. See this one, we have taken the Fibonacci levels up to what it can go. See this, now at the moment it is facing the resistance at the 50% level according to the Fibonacci levels. See this, we'll just maximize for you. See this is the 50% level where it is facing the resistance. For tomorrow, what will happen if it gaps up? It will be just going sideways. So for tomorrow, what will happen? We will see in the on the 15 minutes or 5 minutes candle time frame. Okay. So now we will be going on the 15 minutes time frame. There are chances of opening the market gap up. If at all the market opens gap up above the 500, because this is psychological level, and if the psychological levels needs to be broken by the market, it has to open the gap up. But if it opens flat or gap down, it will be volatile here only. It may also come to uh, fill this gap also, today's gap which is created today. This one, this gap will be, it may be filled, may not be, because here it was a major buying, so may not be filled also. Here there will be again a little bit buying over here at this level, 400 levels, and then it will stay just sideways or volatile early morning. Even if it opens gap up, means if this level, this psychological level needs to be broken, 17,500, then it has to open gap up, and after a gap up open, it will just be volatile above this level. This one, this level, above this level, it will test this level again, and it will just move on here. Okay, and it will be sideways only. Okay, so how to trade tomorrow? If it opens gap down, don't take any trade, because it is going to be sideways, or little bit will selling will be also there, but I think the new beginners should not take any trade. They should wait for some while, means for the second half of the market. If the market goes sideways, wait for that, wait for a range to be formed over here. If it opens flat or gap down, there will be a range, and if at all the range breaks to the downside or upside, you can take the trade with the strike price of the next expiry, not the same day, because there will be a drag down of the premium very fast, because as it is an expiry day. Okay, if at all the market opens over here at this level 17,600, 620, you can buy immediately a put. Immediately you can buy a put by seeing the price action over here, because there on the moving averages there will be a huge gap from the moving averages. So you can just buy a put over here, initiate a put with a very strict stop loss of 20 points only, not more than that. Okay, you can buy put from here. You can close your trade on the 20 or 30 points only, not more than that. Go for the don't be greedy for the more points, because market is going to be volatile over here, and if at all it forms the range, then you can just wait for the next trade in the second half of the market. If at all it breaks the range upside and uh, sustains above 620 levels, then you can even carry forward the position for the next day, because the market will travel upside from there itself. After 620 it will be confirmed that the market is going to go upside only, in the mood to go the upside only. So you can even carry the positions on the call side if it sustains above the 620. On the put side you don't carry any position, just close the positions on the put side. Okay, so don't carry any positions on the put side. You can carry the positions on the call side for the next expiry, that too above the 620 levels. If the market sustains above 620 levels for more than half hour, 1 hour, then only you should carry the positions, otherwise no. Thanks for watching this video, guys. Thank you very much. Please subscribe the channel if you are new to the channel. Please hit the like button and press the bell icon if you want more notifications and more videos like this. We will be uploading some live trading videos also on the channel, so that we can discuss how we take the trade and how we protect our profits, how we protect our capital by placing the stop loss, where to place the stop loss, where to book the target, all the things. Okay, fine. Thank you very much. Thank you for watching this video. Thank you very much, guys. Once again, have a nice day.